Hello trader, welcome back to my YouTube channel. So today I am going to share pivot point strategy with price action strategy. A very important point before we start: everything we discuss in this video can be used for currency trading, stock trading, and crypto. Because price action stays relatively consistent across different assets, so we're going to go very in depth in this video. Pivot points trading strategy. Pivot points are one of the few leading indicators and should be the first tool a trader should look at to enter a trade. Today we will dive deep into the significance of pivot points for day trading. When you've finished watching this video, you will understand why day traders love using them for entering and exiting positions and how you can employ them as a part of your overall trading plan. So what are pivot points? First, a pivot point is an intraday technical indicator used to identify trends and reversals mainly in equities, commodities and forex markets. Second, in financial markets, a pivot point is a price level that is used by traders as a possible indicator of market movement. A pivot point is calculated as an average of significant prices. If the market in the following period trades above the pivot point, it is usually evaluated as a bullish sentiment, whereas trading below the pivot point is seen as bearish. Third, day traders calculate pivot points to determine levels of entry, stops and profit taking. 5 reasons why day traders love pivot points. First, unique for day trading, the pivot points formula takes data from the previous trading day and applies it to the current trading day in this manner. The levels you are looking at are applicable only to the current trading day. This makes the pivot points the ultimate unique indicator for day trading. Second, short time frames. Since the pivot points data is from a single trading day, the indicator can only be applied to shorter time frames. The daily and the 4-hour chart will not work because it will show only 1 or 2 candles. The best time frames for the pivot point indicator are 15-minute, 30-minute and 1 hour, hence its use for day traders. Third, high accuracy. The pivot point indicator is one of the most accurate trading tools. The reason for this is that the indicator is used by many day traders, professional and retail alike. This will allow you to trade with confidence. Fourth, rich set of data. Pivot points on charts provide a rich set of data. The indicator gives at least 7 separate trading levels. This is definitely enough to take a day trader through the trading session. Floor traders pivot points. Floor traders pivot points are the most popular pivot points among traders. The central pivot point represents the intraday point of balance between the buyers and sellers and is usually where the largest amount of trading volume takes place. The reason is that the floor traders are using the central pivot point as the main level of the day, and most market orders are usually placed between the pivot point and the first levels of support and resistance. The main reason why the pivot points are working so well on a trading chart is that many traders are tracking the support and resistance levels and are executing their orders when price approaches each specific level. And now, how to read the pivot points. Pivot points are one of the few leading indicators and should be the first tool a trader should look at to enter a trade. Only when prices reach a certain point, the trader will be able to determine whether to go long or short and set his profit objectives and stops accordingly. Generally, the pivot points can be interpreted as follows. First, if the price is above the pivot, the outlook is considered bullish. Second, if the price is below the pivot, the outlook is considered bearish. Third, if the price decreases below the pivot, the first target is support 1 or S1. If the price continues to decrease, the next target is support 2 or S2. If the price continues to plunge, the next target is support 3 or S3. Fourth, if the price rises above a pivot, the first target is resistance 1 or R1. If the price continues to increase, the next is resistance 2 or R2. If the price continues to increase, the next target is resistance 3 or R3. How to use pivot points. The very essence of trading with pivot points is based on the idea that the price tends to reach yesterday's close point much more often than to overcome the previous day range. That's why the most popular calculation period for pivot points is daily. In that context, all pivot levels play the role of support and resistance. The central pivot point is the most important part of the whole setup. The location of the main pivot point on the chart represents an important information to be aware, because there is high probability that it will be reached. I prefer to compare the value of the main pivot point with the value of the previous day. First, if the current pivot point is higher than the previous one, I only consider taking long entries. Second, if the current pivot point is lower than the previous one, I consider taking only short entries. I also take into account the distance between the main pivots. First, pivots drawn at a short distance one from another indicate a possible range. I avoid trading on markets where the most recent pivots are closed, as it will most likely stay flat and offer low probability entries. Second, pivots drawn with a larger distance between them indicate a trending market. Pivot point trading strategy. I suggest everyone please practice more and more before jump into a live trade and then start making a profit. I hope that you will like my strategy. Please share and comment. Don't forget to subscribe my channel. Thanks for watching.